Hey, what's up YouTube? This is Leo with DRIPCalc. So yesterday I made a video about YMAX versus YMAG. Those are funds of funds from YieldMax. And so my basic premise was that I don't like YMAG because it has certain funds in it that are not doing so well. And I explained it in details. And in this video, I actually, because I had some comments on my the posts on social media and whatever. So people, there are people who like kind of defend YMAG in a way. And so I wanted to do a back test. So in my yesterday's video, I said that if I wanted to be in YMAG and Magnificent 7 YieldMax funds, I would avoid this bottom three, so APLY, MSFO, and GUI, and I would only buy NVDY, TSLY, AMZY, and FBY, and which I actually do. But anyway, I wanted to backtest this idea and compare returns of just these four funds right here, and I call this YMAG 2.0 or whatever, YMAG on steroids versus YMAG itself. And that's what I'm going to cover in this video, and just show you the results. Anyway, before I start, this video is not financial advice. I am not financial advisor. If you need investing help, contact a professional. And also, guys, I ask you to smash the like button, subscribe to the channel. If you have YMAG, tell me in the comment section why you like it. If you don't have it, tell me why you don't have it. If you're in YieldMax, tell me what's your favorite fund and whatever. And yeah, like the video, subscribe to the channel. It really helps to helps with YouTube algorithm. Okay, so anyway, let's begin. So my premise about YMAG was that these funds here, this bottom three funds, APLY, MSFO, and GUI, they are not doing so well, and you can see this in their total returns. So only 15% without dripping, 16 and 9.5%, and with drip it's 18% return for APLY, 18% for MSFO, and about 10% for GUI. Now these numbers, they fluctuate a little bit here and there, but overall these guys are not doing so well. And out of the top four funds in YMAG, TSLY has the lowest return so far, and this is 1 year data. But the thing is, actually, yeah, all these funds have been around for at least 12 months, so it is fair comparison. Anyway, so why I don't like YMAG? Because of those three funds. And you can see here in our dividend calculator, in dividend clock or countdown clock, I color coded YMAG and corresponding fund that pays that week. So next payout is in 6 days, and that will be out of YMAG, it will only be MSFO. And as you can see over here on the dividend payouts, see they have this 5 cents, 6 cents payouts, and so that will repeat itself every week or every 4 weeks. So right now we are pending a dividend which should be paid tomorrow. For some people will be paid maybe on Monday, but whatever. For this week we're going to receive like 27 cents for YMAG, and so it will be a decent dividend, slightly higher than here, so somewhere around this much. Anyway, but the following dividend after that, actually 2 dividends later, you will again receive a pretty small dividend because of MSFO. So if you look at the clock again, so here group A, when YMAG pays on group A, you get dividend from TSLY and GUI. Then group B, NVDY and FBY. Group C, only MSFO, and group D, you get APLY and AMZY. And that's why it all of this dividend, every 4 weeks you will get a low dividend. Anyway, so I backtested returns of YMAG. If you invest, let's say, $40,000 into YMAG, and you can do it on our website, but basically if you invest $40,000 into YMAG, you would start with like 2011 shares, collect a total of 14,000 in dividends, and and now my backtest is with drip, but the returns without drip are similar. And so your total share count right now would be about 2,736. Okay, that's if you invested $40,000 into YMAG on day one when it started testing. And so then I did comparison of these four funds at the top, right here, NVDY, TSLY, AMZY, and FBY, against YMAG, and then I put it all in a table. So here is TSLY versus YMAG. So if you invested $10,000 in TSLY, you would start with 557 shares, because the share price on that day, on January 30th, right here, was for TSLY, look at the chart, it was 17.94, which is shown right here. And that's closing price, but it didn't move a lot that day. Anyway, and so I compiled that all. You can backtest it yourself, but I put it all in the into the spreadsheet right here, and let's take a look. Okay, so here's YMAG. You put $40,000, and the share price on the first day of trading, current share price, so almost no loss of net asset value or principal. Starting shares, end shares, unpaid dividend. So again, I said they already declared dividends, but those dividends still haven't been paid. So these are reinvested shares bought with a reinvested dividend. So your total shares, all of these numbers are with dividends being reinvested. Okay, but because the latest dividend payment was not made yet, we account it here because it will be paid in a couple days. So I account for that here. And so your total return since inception is 36%, because we don't count dividends. That's what you received, and you actually have to pay taxes on it. But because you reinvest all the dividends, so this is your total return, 36.8%. That includes the latest dividend. And here, over here, YMAG 2, so in this column, I basically added up so this column here for AMZY, investing $10,000 into AMZY, and total returns in the same period. So I just fixed this bottom row for these 4 funds right here, because it was not calculating correctly. But anyway, so if you invested $10,000 split equally into each of these funds, AMZY, FBY, NVDY, and TSLY, so again, you invest 40 grand into this fund and 10,000 equal into these 4 funds. Here is your total return combined, all the numbers combined together. You can see that your total shares would be 3,179. Your current value would be 62,900, and again, this includes the unpaid dividend for FBY and NVDY that will be paid out at the end of this week. Okay, and so the total return for YMAG 2, so just the Magnificent 4, is 57.2% return, and total return for regular YMAG is 36.8. And you can see it's a huge difference. It's 20% total return difference if you actually didn't go with YMAG but created your own YMAG and just split the money equally into these top 4 funds. And this is annualized because it's been pretty much 10 months since the inception. Again, the inception was on January 30th. That's the first day of trading, and today is like December 5th, so about 10 months. Annualized return 44.2% for YMAG. This is projecting forward, but probably will stay around there. And 68.7% return if you construct your own YMAG 2.0 or Magnificent 4. And yeah, so the clear difference that the 3 stocks at the bottom, again, AMZY, MSFO, and GUI, they're really dragging down the total performance of YMAG because their returns are pretty small, their dividends are pretty small, and forward yield is also not very good. So you can compare. Here, the lowest yield is on FBY for current months. They're paying very little this month, but usually their payments are pretty good. Let's take a look here. So usually their payments are like around 60-70 cents. But right now, or sometimes like over here, it was 92 cents. Here they actually paid over $1 3 times in a row. But this month they're paying only 37.5 cents. I don't know why. The actual stock is doing good since last dividend payment. If we look at the chart, so they made the payment over here, and the stock went up to 19.88 a month later. So they added about 70 something cents to the stock price, and this little drop here already counts for the dividend being paid because yesterday was ex-dividend date. So this drop is because of the dividend. So that accounts in. But so from this dividend until this dividend, the stock price went up like by 76 cents. Okay, so I'm not sure why they're paying only 37.5 cents right now, because FBY actually the underlying of FBY or Meta, you can see right here, it is actually, yesterday it made 12 all-time high and the day before. So let's take a look at the price chart, 1 year. So yeah, it's at all-time high, 614. So, and the underlying, okay, so it's down like $6 today, but it's still near all-time highs. And FBY, I really like the stock. This dividend is kind of low, but you know what, the next one should be much better. They have they're paying a small portion of what they could pay. Anyway, guys, so yeah, bottom line, I am not a fan of YMAG. I will not buy it, but effectively I have created my own YMAG because I own all of these funds, AMZY, FBY, NVDY, and TSLY. And now I'm not buying any more of them, and I explained why in a video a few months ago. Essentially, I don't like how the management is working with the covered calls. I think they're way too close to the money, and that creates a lot of unnecessary losses for the shareholders, especially now that they do they do spreads. So and the spreads are completely stupid on most of the time. They're just losing money, and so I think I can do better than YieldMax manager, and that's okay. But the shares that I already bought, I'm keeping them. I'm gonna wait until they pay me back about 70-80% of my initial investment, and then what I'll do is I'll reassess. I might start reinvesting the dividends. I might sell some off. Now the only one that I want to sell is Connie, although right now I'm not sure, but basically my highest purchase price for Connie was $24, so I'm waiting for it to go back to $24, and then I'll sell some shares, maybe all of it, not sure. But I mean, the fund is doing great because Coinbase is doing great right now because of the crypto bull run, but I don't like the way management is running the covered call strategy. So anyway, guys, thanks for watching. Again, not financial advice, but if I would recommend somebody, you know, doing YMAG, I would say, yeah, don't do YMAG. Just get these 4 funds instead. So that's my position. And past returns do not guarantee future returns, or past results do not guarantee future returns. But I think just historically, these guys right here, API, MSFO, and GUI, they've done poorly, and there is no reason why they should do better in the future. The reason for that is their underlying Apple, Microsoft, and Google are, you know, 3 of the 7 biggest companies in the world. In fact, they're like in the top 4. So Apple and NVIDIA right now are basically 5, and Amazon, okay, part of the top 5 companies, publicly traded companies. And there is no reason why their stock should, like, you know, go up by 30% in 1 month. And because they're so huge, 30% on Apple would make it a $5 trillion company, you know, in 1 month. There's no way that's gonna happen unless they like release flying robots and self-driving car and iPhone 120 all within next month, you know. Bottom line, they're stagnant stocks. The implied volatility on them is pretty low, and that's why the yield on them is pretty low, and there's very little chance that it will improve going forward. Therefore, I think they'll underperform the top 4 funds in this group, and they will drag they're a drag on the total performance of YMAG, as we can see from this table. And before we finish, guys, a couple more things not related to YieldMax. So basically, as I said in a video a few months ago, I'm really not interested in YieldMax or covering it going forward. Like, I will make an occasional video here and there. I'm really a fan of Bito. I do like YieldMax. I just don't want to cover it on a regular basis. But what I want to talk about, and what I will be making videos about, I want to talk about some really good names that I've been invested in for a while, and I want to do some deep dives on them. 2 of them are SoFi and Palantir. So I loaded a 1-year chart or returns on both of these companies. If you invested 10 grand into them, you would be up 100% on Palantir in 1 year, and almost 300%. I mean, 100% on SoFi and almost 300% on Palantir. But I'm not gonna do a deep dive right now. I just wanna show you what kind of videos will be coming on the channel. I'll take a deeper look at their earnings, at their EPS, their growth, and their prospects. So for both of them, what I will be concentrating is this expenses and break-even points, and, you know, their compounding once they go over this expense. And both of these companies are growing very rapidly. You can see SoFi is growing 29% year on year, and Palantir is also growing 29%, and they have almost similar EPS. So these are GAAP numbers, actually almost, yeah, pretty much the same EPS. And so why is Palantir so much more expensive than SoFi? Now, they're completely different companies, guys, and I will discuss all of that. And I want to do my projections for a couple years going forward. And over here, I'll talk about, you know, analyst estimates, which I think are completely off base. They're way too low on both of these companies. So I want to talk about all of that good stuff and do deep dive on both of them, what my projections are. Now, again, like I said, I'm in both of these companies. I've been in Palantir, in SoFi since 22, since like April or May of 22. That's when I started buying it. And in Palantir, I was actually shorting it at the beginning of last year. Like in March and April, I was shorting it, but then like I lost some money, and I'm like, why am I shorting this company? It's going up and to the right, which you can see right now. And I completely switched my philosophy, and I actually started investing it. But you know, you can never have enough of this stuff. Like Palantir is doing amazing. Like, when is it going to stop so I can buy some more shares? I need more money. Anyway, so I want to talk about companies like this: SoFi, Palantir, Robinhood, some other ones that I really like. For example, I want to talk about company InMode and the ticker INMD. I think it's an amazing growth opportunity, and wow, today it's on sale. So yeah, but basically this company has, look, they have almost $700 million in cash, basically no debt, and they're trading at $1.5 billion. So like they're they're trading at like 45% cash. So and the company had a few bad quarters over here, but I think they're on the path of resuming their growth. You can see the revenue is recovering. So yeah, over here the revenue was rather weak. So I want to talk about this company and some other things, and basically, you know, more broad dividend stuff and less about YieldMax. Now I will cover YieldMax still, you know, occasional video here and there. I will cover BITO, but I'm more interested in growth stocks and dividends, and not in income ETFs. There's return dividends that covers most of the important YieldMax tickers and whatnot. So there's other people to watch. Anyway, guys, and then another thing, we right now have a 40% off Cyber Week sale. Only 3.5 days left, so 40% for life. It basically gives you access to all of these visual stock research tools and stock comparison tools that I just showed you for Palantir and SoFi. And you can try this tool completely free for 2 weeks. If you don't like it, just cancel. You're not going to get charged. And if you do like it, if you want to keep this subscription, it's basically like the regular price is $15, and minus 40%, that's like $9 per month. That's like one frappuccino. And annual subscription on sale will be $72 for the whole year, and you have unlimited access. And I'm constantly adding new tools, improving existing ones. I'm going to add analyst expectations and ratings and price projections for companies. There's a lot more stuff I'm adding and working on. So yeah, this sale will end in 3 days. After that, we'll have like a Cyber Month sale for the remainder of December, but that will be smaller. That will be only 30%. So if you want to get this, just go to the website, and at the top of the page, you have this banner. So when you click on it, your discount is already applied, so you get 40% right away, and you can see $72 per year annual membership, and then monthly is $9 per month. So give it a try. You can cancel within 2 weeks, no charge, no nothing. Okay, guys, thank you for watching. Subscribe to the channel, smash the like button. If you have some comments or you disagree with my assessment, put it in the comment section below. Thanks again, and I'll see you in the next video. Peace.